Imagine this. You're a retiree, sipping your morning tea when you glance at your bank account and spot an unexpected deposit, a tidy sum from the Department for Work and Pensions, landing just a few days earlier than you'd planned. That's not just a pleasant surprise, it's a lifeline, especially when every penny counts in today's world of rising bills and shrinking budgets. Welcome back to the channel, where we unpack the financial news that matters to you. And today, we've got something huge to dive into. The DWP has just confirmed a state pension boost that's set to put extra money in pensioners' accounts as early as this September 2025, and it's all thanks to a clever tweak in payment schedules. This isn't just about a few quid here and there, it's about giving millions of seniors a bit more breathing room, and it's happening faster than you might think. If you're a pensioner or you've got loved ones relying on their state pension, this is the kind of update that could make a real difference. Stick with me as we unravel this promise from the DWP, explore what it means for you, and figure out how you can make the most of this boost. Let's get started on this journey together. To really understand why this news is such a big deal, let's step into the shoes of someone like Joan, a retired librarian from Sheffield who's been carefully budgeting her state pension for years. Joan's always been meticulous, planning her grocery shops and keeping the heating low to stretch her funds. Last winter, she felt the sting of rising energy costs, especially after the government slashed winter fuel payments for most pensioners in 2024, leaving her and millions others scrambling to cover bills. That decision sparked a firestorm. Petitions, protests, and stories of pensioners like Joan choosing between warmth and food flooded the news. The backlash was so intense that the DWP had to act, and fast. By July 2025, they announced a major U-turn, promising not just to restore support, but to deliver it smarter and, in some cases, earlier. This state pension boost, tied to both the triple lock increase and a reinstated winter fuel payment, is the DWP's way of responding to those cries for help. It's not just about the money. It's about giving people like Joan a sense of security, knowing they won't have to face another winter wondering how to make ends meet. And here's the kicker. Some of this cash could hit accounts as early as 5 minutes, or rather 5 days, before the usual schedule, thanks to a tweak in how payments are processed. That's the kind of update that's got pensioners across the UK buzzing, and it's why we're diving deep into every detail today. The core of this DWP promise is a combination of two big moves: a 4.1% state pension increase under the triple lock and a revamped winter fuel payment that's now reaching far more pensioners than last year. Let's start with the pension boost itself. The triple lock, that golden rule ensuring the state pension rises each April by the highest of inflation, average earnings, or 2.5%, is delivering again in 2025. For those on the full new state pension, folks who retired after April 2016, this means weekly payments are jumping from $221.20 to $230.25, adding about $473 to your annual income. If you're like Joan on the older basic state pension, your weekly payment goes from $169.50 to $176.45, a $363 yearly bump. These increases might not sound massive, but when you're budgeting for essentials, that extra $9 a week can cover a grocery run or a chunk of your energy bill. The DWP's commitment to the triple lock, reaffirmed by Work and Pensions Secretary Liz Kendall in July 2025, is a nod to the 12.9 million pensioners relying on this income. But what makes this update stand out is the timing. Normally, pension payments follow a strict schedule based on your national insurance number, but in 2025, bank holidays like June 5 and September 25 are shifting some payments earlier. For example, if your pension is due on a bank holiday, it'll arrive on the last working day before, sometimes as early as 5 days ahead. For Joan, this means her June pension could land on June 2nd, giving her a head start on bills. It's a small but meaningful tweak, ensuring pensioners aren't left waiting when banks are closed. Now let's talk about the winter fuel payment, because this is where the DWP's promise really shines. Back in 2024, the government made a controversial call to limit this payment, worth $200 for those under 80 and $300 for those 80 and over, to only pensioners on pension credit or other means-tested benefits. That cut excluded about 10 million people, sparking outrage from groups like Age UK, who warned of a surge in fuel poverty. The backlash was impossible to ignore, with over 19,200 signatures on a petition calling for a universal pension boost and stories of retirees like Joan layering up to save on heating. By early 2025, the DWP responded with a major policy shift, expanding eligibility to all pensioners with an annual taxable income of $35,000 or less. That's a game changer, covering roughly 9 million pensioners, 3/4 of the total, compared to just 1.5 million last year. The payment will roll out starting September 15, 2025, and here's the exciting part. Due to the same bank holiday adjustments, some could see it land as early as September 12th. For Joan, who's well under the income threshold, this $200 is a lifeline, enough to cover her winter gas bill or stock up on warm clothes. But there's a catch for those like her friend David, a retired accountant whose private pension pushes his income to $36,000. If you're over that $35,000 mark, the payment might arrive, but HMRC will recover it through your tax code, adjusting your pension or other income in the 2026-27 tax year. It's not a fine, just a way to target aid, but it's worth checking your income now to avoid surprises. To make sense of this income threshold, let's break it down with a real-world lens. Taxable income includes your state pension, about $11,273 a year for the full new state pension in 2025, plus private pensions, earnings from part-time work, savings interest, or rental income. If you're single and your total stays under $35,000, or you're in a couple where at least one of you qualifies, the winter fuel payment is yours to keep. For couples, the payment is often split, so if Joan's partner is over the threshold but she's not, they still get half the amount. The DWPs made it automatic for most, using existing pension records, so no forms are needed unless your circumstances have changed, like a recent move or a partner's passing. You can check your eligibility on Gov UK's winter fuel payment page, where a quick tool lets you input your income details. For David, who's just over the limit, there's an option to opt out by September 15, 2025, to avoid the hassle of HMRC's clawback. It's a simple call to the DWP's helpline at 0800-731-0160, and it keeps your finances tidy. This system reflects the government's attempt to balance fairness with efficiency, especially after last year's backlash showed how much pensioners value this support. The $742 million Household Support Fund, extended through March 2026, is footing the bill, a sign the DWP's listening but also working within tight fiscal constraints. Let's zoom out to see why this boost matters in the bigger picture. The cost of living crisis hasn't gone away. Energy bills are projected to rise 10% this winter, and inflation, while down from its 2022 peak, is still at 2.2%. For pensioners on fixed incomes, these pressures hit hard. The DWP's early payment tweak, those 5 minutes early moments, means pensioners like Joan can plan better, maybe paying that gas bill before the cold snap hits. But it's not just about timing, it's about scale. With 9 million pensioners set to receive the winter fuel payment and 12.9 million getting the triple lock boost, this is one of the biggest pensioner support packages in years. The government's under pressure after 2024's missteps, and Chancellor Rachel Reeves has called this a step toward dignity in retirement. Yet there's a shadow hanging over it. The state pension's cost is ballooning, $146 billion in 2025, projected to hit 7.9% of GDP by 2073. With fewer workers per retiree, 280 pensioners per 1,000 workers now, rising to 393 by 2070. Some experts question if the triple lock is sustainable. For now, though, it's locked in until 2030, giving pensioners certainty. But for someone like Joan, the real win is knowing she's got that extra $473 a year and $200 for winter, easing the stress of budgeting through another tough season. Another layer of this update is the DWP's push to fix past mistakes, particularly around underpayments. Since 2021, they've identified 130,948 pensioners who were shortchanged due to errors like missing home responsibilities protection for parents or incorrect pension adjustments for widows. The average back payment? A whopping $11,725, with over $1 billion repaid so far. Take Margaret, a widowed pensioner from Bristol, who discovered she'd been underpaid for years because her late husband's pension wasn't properly factored in. After a quick call to the DWP, she received $12,000 in arrears, enough to renovate her home and enjoy a rare holiday. The DWP's ongoing correction exercise, set to wrap up for most cases by late 2025, is part of this broader update, showing they're not just boosting payments, but righting wrongs. If you think you might be affected, maybe you're a widow, over 80, or took time off for caregiving, check your pension record on DWP or call the pension service. It's a 5-minute task that could uncover thousands, and with the DWP processing 90% of such claims within 50 days, it's worth the effort. This focus on fairness adds emotional weight to the update, reminding us that behind every policy are real people with real struggles. Let's not forget pension credit, the unsung hero of this update. It's a benefit that tops up low incomes to $227.10 a week for singles or $346.60 for couples, yet 850,000 eligible pensioners aren't claiming it, missing out on $4,300 a year on average. Why? Some think it's too complex, others don't know it exists. The DWP's made it easier, with 90% of claims now online and a helpline at 0800 99 1234 for guidance. For Joan, whose income is just $200 a week, applying for pension credit could unlock not just extra cash, but discounts on council tax and a free TV license since she's over 75. The DWP's campaign to boost uptake is a key part of this update, with leaflets landing in pensioner households and local support hubs stepping up. It's a reminder that this boost isn't just about the headline payments, it's about connecting pensioners to every penny they're entitled to. If you're watching and wondering if you qualify, take 5 minutes to use the DWP calculator. It could be the best call you make this year, turning a tight budget into one with room for small joys, like a family dinner or a new pair of shoes. Of course, this update isn't without its challenges. The winter fuel payments $35,000 income cap, while fair to many, frustrates those just over the line. David, our accountant, feels the pinch. $300 isn't pocket change when energy bills are $2,000 a year. The DWP's opt-out option helps, but it's extra admin some wish they could skip. Then there's the looming tax issue. With the state pension now at $11,973, it's just $597 shy of the $12,570 personal allowance, frozen until 2028. A few more years of triple lock increases could push millions into paying tax on their pension alone, a reality already hitting 80% of retirees. The DWP's aware, but Work and Pensions Minister Torsten Bell says the freeze is locked in, leaving pensioners to plan carefully. For younger viewers, this update is a nudge to save more now, maybe through a workplace pension or ISA, because the state pension, even with boosts, won't cover a comfortable retirement. The DWP is also reviewing the pension age, with a rise to 67 starting in 2026 and 68 possibly by 2030. It's a reminder that these changes, while generous now, are part of a system under strain, with tough choices ahead. As we round out this story, let's reflect on what this DWP promise means for pensioners like Joan, David, and Margaret. It's $473 more a year for some, $300 for winter heating, and a chance to claim back thousands in underpayments or unclaimed benefits. It's about those 5 minutes early, payments hitting accounts ahead of schedule, giving you a head start on planning. But it's also about empowerment, checking your pension record, applying for pension credit, or opting out of payments you don't need. The DWP's update, confirmed in July 2025, is a response to years of struggle, from the cost of living crisis to policy missteps, showing that voices like yours can shape change. So, take a moment to review your finances, make that call, or visit gov.uk. This boost is your chance to breathe easier, maybe even enjoy a warmer, brighter winter. Thanks for joining me on this deep dive. I hope it's armed you with the knowledge to make the most of what's coming. Share your stories or questions below, and I'll catch you in the next one where we'll keep exploring the updates that matter to you.